Cathie Wood versus Michael Burry. Two of the most high-profile investors around today. One who centralizes on innovation, technology, and rapid growth, and the other who focuses on bubbles, mispricing, and investor greed. But regardless of the strategies they use, both investors, Wood and Burry, like to bet big. With the 13F filings that just came out, we got an awful lot of financial information from a bunch of different investors, including from Michael Burry's hedge fund, Scion Capital. The last time we got this sort of information from him, we found out that he had placed his largest ever bet against Tesla right when it hit a peak of above $800. This time round, we found out that Burry bet against Cathie Wood's ARK Invest Innovation Fund, known as ARK-K, an ETF that has been getting hammered all year. And Cathie Wood came out swinging. Now I'm going to give you a detailed breakdown of what's going on, why Cathie Wood had a tough year, why Burry is about to make it tougher, and what Cathie had to say about it all. But really quickly, if you're new to the channel, then make sure to subscribe, like and comment. We're putting out loads of content just like this constantly that you don't want to miss out on. So first of all, we need to set the scene and explain why Cathie and her funds have been having a hard time. It starts off with something I've talked about a lot recently, so I'll try not to bore you all, but obviously it's China. The regulation and crackdowns that the Chinese Communist Party have been throwing around have hammered a bunch of stocks. Alibaba's down, Tencent is down, BYD is down. To be perfectly honest, off the top of my head, I can't name a single Chinese stock I know that's up over the last couple of months. Now this is obviously a problem for Cathie because around about a year ago, Cathie dove headfirst into Chinese stocks. She threw caution to the wind and decided to get in on one of the most volatile markets in the world. She and ARK Invest bought over 1 million shares of Alibaba, 1.4 million shares of BYD, 7 million shares of JD, and over 11 million shares of Tencent. Every single one of those companies, however, has been crashing over the last few weeks and they don't seem to be bottoming out. Needless to say, she and her fund have lost a lot of money on this gamble of hers. And as her ETF is so easily entered and exited, she knows that she can't sustain losses or her investors will just walk away. So, a couple weeks ago, she made the decision to turn her back on Chinese stocks, to dump her shares and denounce the market as too dangerous and too fraught with regulatory risk. But unfortunately for Cathie, China isn't the only problem with her fund. Her ARK-K fund is literally known as an innovation fund, but most of its holdings have struggled this year. And that is pretty much the same for any innovative, high-growth stock. These companies like Coinbase, Roku, Zoom, and Shopify have been pumped to a ridiculous degree over the last year. Now, before you scream at me, I'm not saying that Shopify and Zoom are bad companies, that they are about to go bankrupt or anything of the sort. But I am saying that their stocks are grossly overpriced and that the market has now realized that. These growth, tech, hype stocks, whatever you want to call them, they've reached a sort of critical mass over the last few months where no one is willing to buy them at these prices anymore because the valuations are just too generous and they've actually started to fall. Cathie's fund is made up by these sort of stocks, and as they have performed badly, so has her fund. But once again, it doesn't stop there. Cathie's highest conviction stock, the one that she's always been most sure about, is Tesla. She pretty much only has the platform that she does because of her early bets on Tesla and the success that that brought her. But Tesla is a growth stock and it hasn't been immune to the last year's market conditions. While it peaked at a pretty incredible $880 a share, Tesla's had a rough time since then, losing over $200 from its share price. Now part of this is due to the same things as other growth stocks, but there is a bigger problem with Tesla, and that is regulatory risk. Tesla has been selling full self-driving for years now, despite the fact that this isn't an accurate representation of what it is. And for a while now, people have been wondering when the US authorities are going to investigate. Well, that time has come. Tesla's autopilot is being probed by the NHTSA, and the fear is that Tesla's full self-driving is about to be delivered a mortal blow. Now, Tesla is ARK-K's largest holding, so it's no surprise that the fund has fallen with the stock. But it does give us an insight into the pressure that Cathie has been facing over the last year. Finally, Cathie started to make headlines by predicting that inflation fears are overblown and that deflation is the real threat here. But her claims are pretty unsubstantiated and she has so far proven to be wrong. She's made a fair few predictions claiming that inflation will fall right back down to reasonable levels and that her innovation fund will recover once that happens, but her targets have been missed almost every month this year. And as we get closer and closer to proving that inflation isn't transitory, Cathie's position gets harder and harder to justify. In short, Kathy's had a tough year. Her fund is down and her reputation is at risk. And bears like Michael Burry are ready to pounce. So ARK K is looking like it's in a tough spot, and it's no wonder Michael Burry has opened up a short position against Kathy's fund. Burry is infamous for his huge bet against the housing and the mortgage market in 2006. It made him and his investors billions, and he's been looking for the next big bubble ever since. He's already taken out his biggest ever short position against Tesla, a position that he is in the green on, by the way, and as Tesla is such a significant portion of Cathie Wood's ARK K fund, it should be no surprise that he's shorted that as well. Now, unfortunately for us, Burry mostly works in silence and lets his results do the talking. He hasn't actually said anything about his big Tesla short or his big ARK Invest short. The only reason we even know about them is because of financial reporting that he is legally required to make public. So we don't know what's going inside his head, but luckily we do know exactly what's going on inside Cathie's. A few days ago, she came out with a tweet storm that did not go amiss, and I'm going to show you guys exactly what she said. Most bears seem to believe that inflation will continue to accelerate, shortening investment time horizons and destroying valuations, despite what we believe has been a supply chain related short-term burst in inflation. Both equities and bonds have appreciated since March. Unlike the tech and telecom bubble, this equity bull market has broadened beyond the innovation strategies that boomed last year to value and other stocks that had trailed. The bull market has strengthened, setting the stage, we believe, for another leg in innovation strategies. The equity market is likely to reward disruptive innovation strategies once again when headline inflation breaks and/or fears of recession increase. If the bond market is correct, one or both will be obvious during the next 3 to 6 months. Since mid-May, a number of commodity prices have been breaking down. Lumber minus 65 to 70%, copper minus 10 to 15%, oil minus 10%. An unexpected increase in the dollar also is negative for commodity prices. Now, the Manheim Used Car Index, a leading index for new car sales, is slipping. The deflation in commodity prices is cyclical, but it's adding to the secular forces caused by technologically enabled disruptive innovation, good deflation, and creative destruction, bad deflation. If we are correct, GDP and revenue growth will diminish and the opportunities in nascent technologies begin to move macro needles. In this environment, innovation strategies should distinguish themselves. In our view, the seeds for the innovation explosion that ARK Invest is dedicated to researching were planted during the 20 years ending with the tech and telecom bust. Having gestated for more than 20 years, these technologies should transform the world during the next 10 years. To his credit, Michael Burry made a great call based on fundamentals and recognized the calamity brewing in the housing mortgage market. I do not believe that he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. So once again, Cathie has reiterated her position on inflation, claiming that fears are overblown, the inflation we have seen is transitory, and that deflation is on the way. She pointed to new car prices falling again and commodity prices like lumber and oil falling too. But as usual, she has tried to paint a picture of inflation caused purely by supply-side shocks. She pretty much completely ignored the expansion of the money supply, as she so often does, and made her case for why innovation and tech stocks are actually set to boom. To be honest, anyone who follows her has heard this stuff before, and there was only one thing that she really added there. She finally gave us a time frame for her hypothesis of 3 to 6 months. Which is great because it means that she can no longer keep pushing her claims along. We finally have some dates to hold her account for her claims. She did, however, take a swipe at Michael Burry. She basically said that he got one thing right and he doesn't know what he's talking about and he doesn't understand innovative stocks. But actually, I think it's Cathie who doesn't know what she's talking about here. She came out swinging for a guy who never even mentioned her name. Burry didn't run to the press or start a tweet storm about how ARK K is overvalued. He simply went about his business, running his fund, and made the legally mandated publications to the authorities. Cathie's decision to claim that firstly, she knows what Burry is thinking, and that secondly, he's wrong about those thoughts that she somehow knows, doesn't paint the brightest picture for her. As already discussed, Cathie's in a tight spot. Her funds are getting hammered, and as she runs ETFs, not a hedge fund like Burry, her investors can and will leave her at a moment's notice. She doesn't have the luxury of working in silence, as her fund and her figure is based on her public perception, and she can't accept a hugely successful investors like Burry betting against her. As for my thoughts on this whole issue, I think Burry gets a really bad rap on YouTube and it's pushed by people like Meet Kevin. People like to reiterate funny lines like Burry has predicted 5 out of the last 2 crashes, claiming that he misses more than he hits. But the reality is, Burry is an insanely successful investor who has returned 2,140% since he opened his first fund in November of 2000. That's compared to the S&P 500's return of 225%. Something people like Meet Kevin need to understand is that just because Burry tweets about a bubble doesn't mean he's actually putting money against it. And there's no need to go off his sometimes odd tweets because he legally has to provide statements every quarter where we can see what he's shorting and by how much. His results speak for himself. He's beaten every index over a 22-year period, including 2 of the largest crashes in human history. Cathie Wood has beaten the indices over a 7-year period during the strongest bull market of all time. In my opinion, the 2 investors are not comparable. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people like you. There are links down below in the description where you can get a guaranteed $25 from Crypto.com, up to $250 in free Bitcoin from BlockFi, and up to $2,300 in free stocks from Webull. There's also a link to the brokerage that I use most of the time called eToro that you can check out as well if you want. Thanks for watching. Until next time.